Alrighty, and we are live. I'm gonna share this stream real quickly. Wait for some people to join in. And I can see on my end, I'll tell you. Okay, getting this ramped up. You guys should be able to see on your end also, show that you're streaming.
Yeah, I'm looking at it right now.
Dope. I'm gonna share this in the TG. Happy Friday, everybody. I hope everybody is enjoying being a bottom today. Don't just be a
Yep.
bottom, be a power bottom. Let's go.
Yeah, dude, I'm not feeling a lot of power today, but definitely the bottom.
Yeah.
If it's
There's
the
a
bottom, yeah, we got a good number of viewers coming in. So we decided to cheer everybody up and quantify how bad or how good it is, and figure out if crypto is dead or long live crypto. And if anybody has any questions, feel free to ask them in the chat, and we'll make sure to try to give you some coherent answers if possible. Storm, what's up? How are you?
Good, dude. Good. Sorry, I'm trying to get a little light above my head.
so what can I see in chat?
Wait, what was that?
That was my.
Is it on my
I use
restream?
a.
Or
I have a big TV above my head, and I just put a white light on just for some lighting.
The tech is we're 2030 over here.
High end.
Yeah, Kaz, how are you doing today?
I'm good. Can you guys hear me okay?
Yeah, sounds great. I
Okay.
hope I'm coming
Cool.
through okay.
Yeah, I hear you. There's I think like a couple seconds, like maybe a second or two lag, but I can hear you good. Yeah, I'm doing all right. It was unfortunate the way markets reacted to the jobs data. Um, the Nasdaq actually posted its biggest weekly loss since November of 2022, which was unfortunate. Um, we had Jerome Powell. Last week he mentioned that he did not want to see any more weakness in the jobs data, and that sure enough, we did see a lot of weakness in jobs data. In fact, it was weaker than any of the analysts' projections, even the low end, because they a lot of times will give a range. Um, So yeah, and then I was hoping. I mean, I was expecting that weakness, but the thing is I was hoping that the markets. So there's the data. There's what Jerome says, and then what's the most important part is how markets react to said data, right? And so I was hoping that markets would have reacted in a way that would have, the thinking behind it was okay, Jerome didn't want weakness. We got weakness. Therefore, Jerome is going to start cutting rates aggressively. And as the market, we're going to front run these cuts and we're going to buy, right? Um, Unfortunately, what happened was all the stuff at the beginning happened, right? The weakness in the jobs, um, the increased likelihood of rates, but the markets reacted weak, right? And so historically, after a tightening, um, when they do start cutting, historically markets react usually pretty aggressively to the downside because that generally signals a recession is incoming. A lot of times, by the time they start um, cutting rates, they're doing it too late, and they're doing it because markets they've held rates too high for too long. Markets have weakened too much, and historically, these types of rate tightening scenarios plunge the economy into a recession. But there's been a lot of talk about quote unquote soft landing, right? and that's what everybody was hoping is going to happen. It's still it's still hoping it's going to happen because there's a lot of bullish things happening in the macro as well, right? But yeah, I didn't the way the markets reacted initially to the weak jobs data was not ideal today. We'll just put it that way.
Yeah, it seems like it's very clear we're kind of headed in that direction of like a quote unquote recession. The one, I guess, positive side of that for like a currency like Bitcoin is that, our government's going to do anything they can to stop us from going into a recession. And the way they do that is by printing tons of money. And what that's doing basically is debasing the US dollar, right? The more money they print, the more the value of the US dollar continues to tank. And the US dollar and Bitcoin or any cryptocurrency has kind of historically been inversely correlated. So when we see a massive drop on the US dollar, Bitcoin tends to do really well. And so that's one kind of benefit that we could get out of this from the crypto side of it is the government's probably going to start printing tons and tons of even more money than they have historically to avoid a recession and pump some more money into the economy. And the more you debase the US dollar, the more assets like Bitcoin perform well. So it'd be interesting to see, but I bet that's exactly what happens. They, like you said, they start more aggressively cutting rates. They start printing more money, anything they can to avoid like a recession.
So I think what's interesting over here, not I think what's interesting over here is the phenomenon of printing money aggressively, or which is basically lowering rates, same thing. We're admitting that there's a problem, and it's a big problem when we print money and we lower rates more aggressively. But we're also saying we're going to do something to prevent that problem from becoming too big. So initially, the markets are reacting and saying, hey, no, we're officially going somewhere bad, but we're going to pull out of it because this economy is now moving to a place where we're admitting we're in a contracting economy, we're in a recession, or coming up on one, but the solution is already being put into place. And then as they continue to print, I think that the markets will start to rebound, but that initial response, like you were saying, which could have gone either way, wasn't positive because we're saying that there's a problem. We've been sort of hiding it for the past year. Inflation's passing. Jobs were initially thought to be okay, and they're really not okay. And now jobs are not okay. We're missing the mark. Markets are weak. The NASDAQ, which is more of the growth sector, has been hit harder. So you have less growth in the stocks. And, tell me your thoughts on this, Kaz. I feel like the growth sectors in tech and stuff are selling off and slowing down. And it's more just the blue chips, that are holding on. But that's not really what you want to see. You want to see growth. So we're moving into a contracting economy that's now going to be pushed out with the dollar, and then the dollar printing, as you said, Storm, is going to be positive for the crypto market. Maybe not initially. It might take a little bit of time because we always react to the general market, I think, right away. But it'd be interesting to see where we are with the dollar index. I think the dollar index is like right on support, and see how that's charting and how Bitcoin's charting. And maybe there's some insight with the dollar index, the rate cut coming up, and maybe a bounce for Bitcoin when the dollar index starts to go lower.
Yeah. So you mentioned, the growth, right? The slower growth, right? So I always talk about the Russell 2000, right? And because that's the small cap index, and if you look historically, those growthier stocks.
Do you want me to pull that chart up for you, Kaz?
Sure. Yeah, pull it up. You can look at the IWM or the Russell 2000.
I'm going to pull up your screen share over here.
Okay. What up?
And you walk people through it.
Dude, that peach that I had was falling apart. It was so juicy.
honestly, that's the most optimistic news we've gotten today in the market. So
Saucy hasn't said
everybody,
anything the whole stream, just been eating that peach.
Dude, it's so ripe that like you could just kind of peel it in half, and then oh my god, it was amazing.
So if you compare the IWM, the Russell 2000s, to the total crypto market cap, they've resembled each other for a very long time. So you mentioned the weakness in growth, and the reason that small and mid cap have been weak for the past couple of years is because the higher interest rates, right? So I'm sure you've heard that the Magnificent Seven or the mega caps, right? They've been outperforming everything because they're not reliant on the interest rates. So when interest rates were tightened and money became more expensive, it actually presents almost an opportunity for these mega caps to monopolize even more than they already have, right? Because they have giant sums of money sidelined, and whether interest rates are high or not, they have access to as much money as they could ever want, right? Whereas these
yeah,
growth companies, they're constantly, whatever money that they do pull in, they're constantly reinvesting and growing, right? That's why they're called growth stocks. But they get put in a sticky situation when rates are raised, because when they need to go ahead and refinance those loans, they're now paying higher interest rates on all that money that they've borrowed, right? So yeah, so and then also what happens is people stop, especially institutions will stop investing because they know that those higher interest rates directly eat into their profits, right? So making those stocks not like a worse investment. So the reason you've been seeing the Magnificent Seven running so hard, and they're also the reason you've been seeing like the S&P and the Nasdaq being so heavily weighted in those mega caps is because everybody knows that they are not affected by the higher interest rates. Meanwhile, these growth stocks are. Does that make sense?
yeah, it makes perfect sense because growth stocks need fresh liquidity, and most of the time they're borrowing it. And if it's expensive, they can't get it. They don't have anything stocked up because they're growing. They're new. They haven't had a chance to really churn revenue or bring money in to stock up. They're just burning through it at this point. And that's like makes sense that it's a direct signal of the high interest rates, of the lack of liquidity in the general market, and it's a really good signal as to why these higher risk and the growth of the economy has slowed down, even though the ones holding up the stock market, Coca-Colas and Apples, are doing pretty good. Um, that's not what we want to see. A good economy needs to be growing. So everything's flashing recession signal over here, and we're acknowledging it. But I think it's good, honestly. I think it's good that we're finally turning that corner because this is a step that has to be taken in order for us to go through the contraction officially and then start using the new liquidity to help grow. So I see it as a positive, even though it's not really pretty at this exact moment. It's good that we're moving to the next step in an economic cycle.
Yeah, and also to touch on what Storm was saying about the money printing, right? So, yes, money, if they start printing money, what that means is, so right now what we have is a situation where there's a lot of sidelined money, like record amounts of sidelined money, which is why I remain bullish, even though, like I said, historically, when they begin cutting rates, we usually see markets not just pull back, but crash historically, right? But here's the difference, right? In the past 6 years, they've printed something like 40% of the M2 money supply, and that money or a large percentage of that money is sitting sidelined. This is like institutional money, right? That needs eventually to make its way back into markets. So when they print money, so right now an environment where interest rates are higher, there's no reason to take on risk, right? So especially with institutions and commercials, all of the returns that they're looking at, it's all about risk adjusted returns. So when you take your money and you put it into the market, particularly into something like crypto, because it's seen as like a extremely volatile asset, right? They there's no need for them to take on risk when they can get something like 5% just sitting in cash, right? But when they start printing money, that cash immediately starts losing value because it's being diluted, right? And also the returns on that cash when interest rates come down, the returns on that cash go down, which essentially forces them to take that money and begin investing it, right? So when you see the printing starts happening and the interest rates start coming down, that's when you see this money on the sideline essentially being forced out into the markets. And so that's when you'll start seeing them start looking at stuff, at the higher risk stuff, at the Russell and crypto, et cetera, et cetera.
And that's another interesting thing that I've seen is the crypto market responds so quickly. Like you'll see these, like TradFi news events, like rate cuts and stuff affect the crypto market so closely or so immediately. But my longer term thesis on cryptocurrency is, I mean, one, it's the best deflationary asset that exists, right up. I mean, better than gold, even better than gold. And gold historically has, performs good in recessions because it's considered like the hedge against inflation, right? And so I feel like, even if we do go through a recession, which I think everything's kind of starting to point towards a recession. I think the big institutions kind of know that. And I think that's why they've been accumulating so much, in the past 3 to 6 months, whereas a lot of retail has been like very quickly reacting to just like the rumors of a recession and, the economy going down. But I think longer term, a recession could be even beneficial for cryptocurrency, because I think long term, that's what crypto is going to be. That's what Bitcoin more specifically is going to be, is like that digital gold, that hedge against inflation when the economy is doing poorly and the US dollar is tanking and being diluted. So I think it's going to be interesting to see how it plays out. But I do think a lot of, there's a lot of pointers, towards like a recession coming. But I think the big question is how that affects crypto long term and how crypto reacts from that.
Yeah, it's interesting what's happening right now. And you have both the macro economy, stock market, and crypto going through some pretty significant changes at this moment. And there's obviously a relationship to both of them. I think we're really just admitting that we have a problem right now, but that shift into bringing the new liquidity into the market, which is going to help growth in, maybe not the short term, but pretty soon. And then having that sideline money, like Kaz was saying, coming back into the market, that's gonna be really positive, because there's always money. The question is, do they want to use it? Can you go a little more into that, Kaz, about how that sideline money, why that's going to be coming back into the market?
Yeah. So to me, that's the most important thing that I don't hear many people talking about, is that there's trillions of dollars in managed money just sitting there, like poised to come into the market. And the reason it's not coming into the market, once again, is because interest rates are high. Therefore, yield on cash is high, right? So all you have to do to make money on cash is lend it at these high rates, and you're making money with little to no risk, But when they print money, or when they decrease interest rates, that money immediately begins losing value. Like, for instance, during COVID, right, when they were aggressively printing money and all assets were just skyrocketing, that was because when people don't realize it, but when you hold cash, you're long cash, right?
Yeah.
That's a position. You're in position when you're holding cash. You are long cash. So, if you held $100 before COVID, and then after COVID, that same $100 would have been worth something like $68. Like you literally lost money by doing nothing. So that's the same thing with this money that's sidelined. If they start printing money, or if they just simply start cutting those rates, the return on that cash goes down, which means they're going to go start looking for return on that cash, because that's their job. And so that will force that sideline money into markets and into these assets. And what's also interesting about right now is that now those trillions of dollars that are sidelined of managed money, they can actually invest in crypto now because the ETFs are now available. And that was not how it was before, right? So before it was like these trillions of dollars of managed money. It was a cool thing to look at or whatever, but that particular money wasn't actually going to make its way into crypto. And now it really can. And these spot ETFs are different too than Grayscale because Grayscale it's not the same as a spot ETF. So a spot ETF, for every $1 that goes into a spot ETF, that institution needs to own $1 worth of the underlying asset, whether it's Ethereum or Bitcoin.
I'll throw your screen up over here, Kaz, if you want to show people what's going on in the ETFs. Give them a little visual.
So here's total crypto market cap. Right. It's been since beginning of the year. Obviously, it's been ripping to the upside, and now we've got this, bit of this range or this like big old flag kind of being formed. Um, this is total crypto market cap. Let me go ahead and go to the weekly. Right. So now each one of these candles is a week. So yeah, you can see from the beginning of the year, we had this nice tight range here. And here's a nice little example of something to look for since it's so obvious. See how tight it got here? So as technicians will call, I look for 3 weeks tight. So that's 1, 2, 3, 4, 5, 6 weeks tight. And that right there, see how tight these closes are? That's a super obvious indicator of institutional accumulation, right? So, anyways, that's funny that I never really noticed there's something total.
Was that right around where Bitcoin, the ETFs opened up?
So January. This week is the week of January 24th. Yeah, so right at the end of January. What was the date of? I don't even know when they opened.
That would be a good question.
Like March.
But February, beginning of February,
January 10th. January 10th, they approved them.
There you go. And then so there you go. February, markets ripped. And this is what it's looked like for the past few months, right? Chop, downside. So we're now coming into the highs of that range of that tight action. So that's what we got going for total crypto market cap. And then so then if you look at that and then you compare it, just to kind of talk about what we were talking about earlier with the Russell. So you guys can see what I mean. Because these institutions, they have in the past, they've treated crypto like a risk asset, right? And I'm wondering if that's going to change. I don't know why it's showing like this. Well, anyways, I don't know why that chart doesn't look right to me. It's not right. Sorry, I don't generally use TradingView, so I'm kind of
no worries.
But anyways,
test
the
out.
Point is that they treat it like a risk asset, and so I like to watch the Russell. And when I generally in the past when I start seeing money coming off the sidelines into the Russell, shortly after I'll generally see money coming into crypto because that's how they look at it. But I'm wondering if that will change, right? Because now we've got this narrative of them calling Bitcoin, digital gold, right? which is the opposite of a risk asset. That's like a buy and hold type asset. And when you have, Trump recently said he wants to buy Bitcoin and hold it, right? So I'm wondering if that's going to change. But yeah, so I don't know if you have any questions. I feel like I pretty clearly
I have a question.
kind of explained, right, how there's trillions of dollars on the sidelines, and when they start printing money or when the interest rates start being cut, theoretically we should start seeing that money forced back into markets and hopefully buying stuff like crypto and the IWM, and that's what I think everyone's waiting on. That's what the markets have been waiting on for a year. You know what I mean? So for almost 2 years at this point. So yeah, but I'll keep pulling up charts and stuff.
Okay, sorry. I apologize. I just hit you right when you said that. I hid the charts. Let me
You guys
pull
can keep
up your
talking.
screen.
I'll just pull up like the ETH chart and draw some lines on it and stuff, and whatever.
Did you
Just let me
know
know if there's anything in particular you want to look at.
there's an interesting study out there that it talks about that most people that are sociopaths, they operate on their computer in light mode instead of dark mode. And I've noticed, Kaz, that you operate with this really bright light
Oh,
mode
yes,
thing
sociopath.
going on here.
Um,
I'm just referencing a study.
I don't use TradingView very much.
So if we reference Saucy, he could be a sociopath, but he doesn't know how to share his screen in light mode or dark mode.
I
So
know. This shit, man. Just like, I was willing to put something just wild up there, man. But I actually do have something that I think about a lot when it comes to this the conversation of um, recession and what Jerome's doing. And I know that Kaz and I have talked about this before, but you know, there's two financial battles that our country has to fight: recession and inflation. And a recession is bad for the people, but inflation is by far worse for a country. And so now our monetary system has been put in a situation where it has to choose one over the other. And obviously, the population wants to avoid a recession, but we can't ignore the fact that inflation is an empire killer. Inflation is a country destroyer. If we hit hyperinflation, if we debase too much, a lot of our power is going to be relinquished. So I wonder, you think about this just as a theory, hypothetical, right? Do you, what does it look like for the United States government to start accumulating even more Bitcoin and attaching its economical power to the store of value in Bitcoin? Right? Is there a way for them to say, you know what, we're going to go ahead and we're going to print money. We're going to avoid a recession. We're also going to accumulate Bitcoin and we're going to hedge our inflation against Bitcoin so that we can remain the superpower that we are.
I don't really see that happening, to be honest. It's just too big of an economy to attach it to Bitcoin, and people are not just going to trade the US dollar in for Bitcoin and settle trades with it. I mean, the reason why we have a world power is when you borrow money as a country or lend money or do a trade or pay back loans, they're doing it basically a majority of it in the US dollar. So no matter what happens, even if we do have the dollar get weakened, because it's all being done with the dollar, we're able to keep the security of our dollar. And then along with that, we have the US military. So those two things really keep us in the running always to make sure that it never gets that bad. So I don't think that we'd ever use Bitcoin personally as like a reserve currency. We've sort of moved past that in the way the economy's going. Um, but yeah, it's weird that the Fed has to both fight inflation and make sure that our economy is going well, which is basically two completely opposite tasks.
And I'm not talking about using Bitcoin as a reserve currency. I'm talking about the United States government holding it as an asset, as wealth, right? Let's say that as a human being, you have horrible credit and you're cash poor, but you have a ton of gold. You're able to maintain a lot of your power, and these, you know, the United States. If we're gonna say that money is real, if we're gonna say that the debt is real, right? Then we would have to also say that they're going to have to build assets to maintain power and credibility as an economy. Or am I off base here?
I think the US dollar is always going to be real because it's used. That's the big thing. And because it's connected to the value of our economy, our GDP, and our military, that makes it real. That's a big, big part of it. When you say the government using money, I'll bring up some interesting hypotheticals. Like we've had governments own Bitcoin. Germany is not a government I would want owning Bitcoin. The US government has sold Bitcoin and it's caused mass fear and panic. Like if we give the US government a lot of money, and let's say Trump gets elected, people think he's generally pro crypto, and he buys a bunch of Bitcoin, and then an administration comes in after him that's not pro crypto and dumps it all. Like, isn't there a risk of having the government in control of these markets that takes away our power of decentralization?
Yeah, that is of course a real risk. But if they're looking at ways to maintain power, then they're not going to worry about those risks, right? That's more of a risk to us as individuals, as people that want to be financially sovereign.
Yeah, I'm talking about our risk. If if the government starts buying too much Bitcoin, it can then have the power to really move that market in a way that we don't want it to, even without regulation, just by
Yeah,
buying and selling if it has large amounts of it. But I guess, I
yeah.
mean, you have institutions buying it, so like, would it be better for us overall for the government to have a lot of it, or is it better that the government is sort of staying out of it and just allowing us to utilize it as a financial tool, crypto
I
in the
think I
US?
think the government. I mean, I think the government would benefit from buying those assets in large quantity. But kind of like Kaz was talking about, it's the perception of what cryptocurrency is, because historically, cryptocurrency has been seen as this really high risk asset, right? But if you start to look at Bitcoin specifically as digital gold, and this, it's kind of like a hedge against bad economic times, and it's a long term holding investment, kind of like how the U.S. government holds large amounts of gold. I think that changes a lot. I just think historically everyone's kind of viewed Bitcoin and cryptocurrency as like ultra high risk, and that's why they dump it so quickly and easily. But I also I don't think I think one of the biggest problems in our economy right now is that we have a debased currency, or no backing of our currency, and I think that's kind of when a lot of this is kind of went to shit, and it's kind of exponentially worse the more money we print, the more kind of fake money we go into debt. I think I'm kind of more on the pro side of, looking into an asset like Bitcoin to back the US dollar to stop kind of hyperinflation and the debasement of our currency. Because, as we've seen historically in many, it's not just recent cultures, but even as far back as like the Romans debasing their currency and diluting their currency, their gold coins, they started basically making their gold coins only like the very outside shell was actual gold, and that's a way to like technically dilute the currency. But I just think historically it's never ended well, and we're seeing kind of that play out in real time. And I think Bitcoin would be a great currency, at least one to really look into, if we are going to back our currency by something. But you're right. Like we don't, as an American, we don't want the U.S. dollar to fall, right? We don't want like the U.S. dollar to collapse and Bitcoin to become like the only currency that exists, because the U.S. dollar is a great asset of ours. But I think we strengthen the U.S. dollar by backing it with something like Bitcoin, long term. But I think we've just gone so far down that rabbit hole and put ourselves in so much debt, and it's tough. It's not as easy as a lot of people may think. But for me, it's like if we want to strengthen the U.S. dollar, I think we do need to back it by something. And you're seeing this,
So
yeah. Sorry.
historically, when anybody who's brought that idea up, anybody who's challenged reserve banking, uh, has been murdered, publicly executed.
No,
Actually,
there's conspiracy theory about it, but like part of the reason the U.S. dollar got went away from being a reserve currency originally, anyways, was partly to fund wars. Because at the time we needed more money to pump into the military industrial complex, and it's this gruesome cycle of printing more money and funding the military to go to war, and it's like this cycle. But yeah, there's a lot of history with debasement of currency and going away from the reserve. But sorry, go ahead.
yeah. Also, what's interesting about kind of the points that you were touching on, right, is that if you look at this chart right here, this is the Nasdaq, um, and you go to the beginning of the year. The beginning of this year, they're supposed to cut interest rates 8 times. And each Fed meeting, he basically said, "No, we're not going to cut." And after each Fed meeting, the market continued grinding upwards, gap up, grind up, gap up, grind up, right? So why? Like, you think that if the market is waiting for the liquidity to come into the market, right? That news of him not cutting rates would be bearish, but the market seemed to be laughing in his face almost, like saying, "Yeah, you're going to print your way out of this, just like you always have." So it makes you think, like, do markets know that they're just going to continue printing forever until they literally can't print anymore? Like, this is the type of stuff that makes me extremely bullish on crypto, because I mean, I don't know how they're going to execute it, how they're going to make it happen, but I do feel like people eventually, the more they print money out of necessity, because there's no real way around it, and I think that's what the market is saying by grinding up in the face of that. I think that they're creating they've got to be creating demand for crypto. Eventually, people are going to get wise and be like, "Let me go buy something." If you're going to keep printing the dollar, why do I want to hold this dollar when I can go buy an asset that has a fixed supply? It's kind of that simple. But what's also interesting is if you look here, right, just based on, so this is the daily chart. You can see here, right, we kind of based out here between like March and April, and then we had this kind of nasty pullback in mid-April, and then right here in May we gapped up. I can't remember what that news was. What happened there in May, right? And then for the next 1, 2, 3, 4 months, we just grind it up, and then look how fast the market gave that back.
So I think a lot of that was jobs data. One of the biggest indicators is how the jobs market is doing. And we were saying this whole year, there's no recession. The jobs are okay. There's no recessions. And then they readjusted that jobs data and said, no, it's actually been missing the mark for months. And that's when it started to crash down. You always see a correction after you crash down too much. We had that big drop down when they were doing with the Japanese. Japan changed their interest rates to positive from negative. And those swaps, the carryover swaps, just were basically, Japan had bonds that were paying money when you bought them, and they were buying them on leverage, big hedge funds in America and all around the world. And then they got margin called, and that was that huge crash day where all the shorts and liquidations were happening, with bigger, I think, than even the first day of COVID officially. And then you bounce back because the shorts have to buy after they get liquidated once the market bounces. And then again, you have now the catalyst now, I think, is, hey, the economy is really bad. The job reports are missing, and we're going to need to print money. And that's where we're saying we're going into a recession. That's how I see it going, and why the markets are reacting that way. So I think we could go lower. where we're basically adjusting from all this time that we said it was okay, we're adjusting back to where it really should have been. And then we start going back up when they start printing, and the landing is hopefully softer and not a hard recession landing, but we're actually just adjusting and taking away all the fake gains from an economy that wasn't there.
Yeah, and the other thing is, it's throughout COVID, right? Like the markets were ripping. Like we had that pullback, but then pretty short after that, they started printing money, injecting liquidity, and markets started sending. So it's almost like, even though they shut down the economy shut down the world for a couple of years, like the markets just said it's okay. Like, I don't know. I feel like there's got to be some pain eventually felt by that. I don't know. But look at this technical level that we're at right now as we speak. We're pulling into the top of this base from the beginning of 2024. Look at that.
Yeah, it's
That's
giving up
crazy.
all that fake where we were basing it on not going into recession, and now we really are. But like you said about the liquidity, and same thing with COVID, where the interest rates were going down, and it wasn't worth it for them to lend money, so they had to enter the market with that money. I think we're going to see the same thing happen, where lending money is not going to make money for these companies, so they're going to now move into a riskier asset, flood liquidity in. The banks are able to borrow more, they'll handle more of the lending side of things. And I think after we adjust, it's going to get higher, but we just have to readjust to where we really are. I think it was a fictitious market. Same thing with maybe in like meme coins and crypto. Not that anybody trades crypto or pays attention to it. Maybe we were sort of in this fake market where it had not been is that good. It had not been that high. It was pushed up by the ETFs. Now we're sort of adjusting it to where it should be in the cycle, and then we can go back to moving upwards after it's adjusted.
Yeah, I don't
But
know. It's hard to know.
the market finds balance, which is really cool about a free market in a way. It's like a beautiful thing.
Yeah, and I think this capitulation of the downside, where we're dropping really heavy, mainly because of the whole recession rumors and fear of a recession. I think that's being overvalued by people who are selling, because, like I said, I don't think we really know long term how Bitcoin's going to perform in a recession, right? Like I think I'm more on the side of, I think Bitcoin does really well in bad economic times, because I think it's transitioning to and again, I'm speaking mainly about Bitcoin, but I think it's transitioning to this safe currency, more similar to gold, which I think is what it was created for. Ultimately, I don't think Bitcoin clearly isn't going to be the single currency that replaces everything. It's not the fastest transaction speeds. It's same thing with like Ethereum. It's a little expensive. There's other cryptocurrencies that kind of fill in those gaps, or like USDT is more like your checking account by day transactions. But Bitcoin was built to be more of a, like digital gold. So I think it's going to be interesting to see how the market responds long term in a recession. But I think this is kind of like, people are so fearful of recession and they're selling your Bitcoin. But I think long term, I don't think that's reflecting the actual value of Bitcoin itself. So
I think you bring a really interesting. Oh, sorry, Storm. Are you still talking? I couldn't hear you.
no, I'm not. You're good.
It was a tiny lag. It's really interesting where crypto is seen as a risk asset, more like in a portfolio. If you're an old lady and your Fidelity's now offering Bitcoin, it's a risk asset, but it's also built to be a hedge against inflation, which would be the opposite, sort of as a risk asset. Be interesting to see where it falls as the recession hits, how people view it and how it's used and how it affects it. I don't know specifically.
That's why I keep bringing that up. I think that's like to me, that's the most interesting thing that's happening in crypto right now, is that shift from people literally comparing it just less than a year ago to Beanie Babies and the tulip trade, right? You have people like Gary Gensler
Yeah.
yes, and you know what I mean, treating it like as if it was something that could go to zero at any moment as they're printing, 40% of the M2 money supply, and as they're accumulating crypto, as they're accumulating Ethereum and Bitcoin, they're saying all that. Now they're saying stuff like this, like Bitcoin is digital gold, and they're beginning to understand that there's a fixed supply. Meanwhile, the dollar is going. They're pretty much going to be forced. It seems like the market, based on the price action, it seems to me like they're saying like the market is saying like you can say whatever you want, Fed. Like you have no choice but to print. So we're going to continue moving up because we know eventually when you print, those trillions of dollars are essentially going to be forced into these assets, and we want to own them, right? So like you can say whatever you want, and you can try to cool the markets off as much as you want by tightening rates, but you're bluffing. Like it seems to me like the market is calling the Fed's bluff, or it has been until this recent pullback. And honestly, this recent pullback to me looks like a pullback that is just dealing with positioning. Like it's just in order for markets to work the way they work, you can't have retail and small speculators levered to the upside because who's going to pay them? The institutions and the commercials naturally have to be the ones that trade. Money doesn't just come out of thin air, I guess, unless they're printing it, right? But somebody naturally is positioned on the other side of that trade, and in the case leading up to this last move, it was the institutions.
I'm going to interrupt you real quickly, Kaz. When you say the institutions are the lever or leverage, can you break that down a little bit more for people, what you're talking about?
Sorry, say that one more time.
You were talking about the lever or the institutions being on the other side and retail could not be. Can you explain that a little more, you or Storm?
Okay, so I only heard the beginning of your sentence, but I think you said I was talking about positioning, right? So if you're levered, like if retail is levered long, like remember going before this move to the downside, remember how bullish the timeline was?
Yeah.
So if everyone's bullish and making bets to the upside, who's going to pay them if they're right?
So you need the institutions to have that money waiting.
No, so in order for the markets to actually make a sustained move to the upside, they need to be the ones positioned long, and they need to get retail to be positioned short and to be extremely bearish. Like I don't know if you guys remember, but during COVID, for obvious reasons, sentiment was pretty bearish. And what happened? Markets ripped, right? Just as soon as we hit those extreme lows and sentiment was extremely bearish and we thought, the world was coming to an end, that is when the markets ripped, right? Because at that point is when retail was positioned extremely short and commercials were positioned extremely long. And so this pullback has done a really good job at shifting sentiment on the for us to call it the timeline to where retail is extremely now bearish. And guess who was buying the lows? Guess who bought these lows? The commercials and the institutions, which for a sustained move to the upside, that's how markets that's how they work, right? They're not going to make a sustained move to the upside if retail is positioned long because retail loses 90% of the time, right?
Retail always loses. Just put that in.
That's why. So
Storm
I was going to actually. Oh, sorry. Go on.
And what you're saying about that makes perfect sense because if retail shorts and it goes to move up, then they're forced to buy, and the institutions can sweep that money, but they're able to make that move. Storm's been talking about this a lot, and we've mentioned it on our live stream as well, that there's these giant liquidations of shorts at that 70 to 72,000 area. And if the market keeps going down, there's probably going to be more shorts that get liquidated lower. And that, like you're saying, the market is going to hunt that liquidity. and
Yep.
that's going to help it shift up. Like it's just looking for liquidity anywhere. And yeah, that move downwards, it's so cool how markets move. That move downwards is going to set it up to then hunt for all the shorts that
Yeah.
are going to get liquidated.
Yeah, that's something I've been talking about for like over a month, maybe 2 months now. But there's so much because we're in that higher term or high term kind of bull flag, right? We're channeling to the downside on Bitcoin. There's so much untapped liquidity at the top, like billions of dollars. And I made a post about, I follow whale alerts on Twitter. And right after we had this last massive liquidation where we got that massive wick and billions of dollars wiped off the stock market and the cryptocurrency market, it was like, BlackRock still holding, Van Eck, like all these top institutions were still holding or accumulated during that phase. But, when you look at a liquidity heat map, you see there's so much liquidity kind of on the top of this channel, which means retail is either entering shorts or selling their bags. Obviously, super fearful. If you pull up the crypto fear and greed index, we're now in, I think it's like a 21, which is like extreme fear the retail market is in while they're selling their bags. Institutions are buying or holding, which again, it's like the perfect recipe for a massive short squeeze to the upside because you get retail super scared and bearish and they're selling their liquidity to institutions. And this is something that's been doing for a long time. I still stand by my thesis that I think it's unlikely that we break that that very low at 48K, just because there's not a lot of liquidity there. Like you pull up a liquidity heat map.
Hey Storm, get a little closer to your mic, brother.
Can you hear me now?
Yeah, you're
I might
just
just
fading a little way.
Okay.
Could be.
Yeah, so there's no liquidity towards that bottom side. I mean, there's a little bit, but when compared to like the very top of that channel, it's not even remotely close. And so where retail money will get liquidated, and that's to the upside. So I think it's unlikely that we continue to move down.
Exactly.
It's definitely possible, right? Like anything is possible in this market for sure. But I think when you read from a macro perspective, you want to counter trade general market sentiment, and you want to look at where the liquidity lies because that's how institutions trade. They need the liquidity to get into their big positions, and like you said, retail almost always loses. So I think it's still very high likelihood that we break up. I think recipe wise, we have everything we need to make that big move up. So it's just right now for me, it's kind of a matter of waiting to kind of see when that happens. So, but it could take a while. I think September too historically has been the worst performing month in crypto history as a whole. So there's a good chance maybe we see a whole nother month, maybe even 2 months of chop or indecisiveness, or maybe we do break that low. But I think ultimately we're going to see a rebound in Q4 has historically been the best quarter for cryptocurrencies historically. So like I said, the recipe seemed like it's kind of lining up for a big short squeeze, and that's been my thesis now for over a month. So,
So you basically are saying what I'm saying, just in a different way, and I like the way you said it better, to be honest. And and so I guess everybody here is probably wondering, all right, how does this all relate to meme coins, right? So the way this relates to meme coins is people start buying the most speculative of assets when there's the most liquidity, right? When like for instance during COVID, right? When they were printing money and giving it out to people, that's when Rolex watches went up 3x. Real estate was going up 20% every year. Like assets, hard assets, anything but cash, like any sort of investment but cash. Because what people are trying to do is aggressively invest the cash because the cash is losing value quickly, and there's no return on holding cash. So if you give people a reason to hold cash, or if they're able to get risk-free returns on their cash, they're simply just going to hold it. They're not going to go take on risk because, like I said, it's all about risk-adjusted returns. But if people are put in a situation where holding cash is losing you money, then they're going to go seek those returns. And a lot of times, it's called the wealth effect. So you'll see things like for instance, if we see Bitcoin make a new high, you'll see people especially if it makes a new high and then chops around, you'll see people booking those profits and going in search of those multiples elsewhere. So when that money printer turns on and goes burr, and when those interest rates come down, what's great about the setup right now is we've like you said, Storm, the ingredients are great. We've got a situation where we've had this pullback. Sentiment is where it needs to be, as we have retail extremely bearish and scared. Like you said, the fear and greed index is extremely fearful, meaning now we've allowed for the institutions and the commercials to position at the lows. They were buying the lows as retail was selling the lows and getting liquidated at those lows on this pullback here, right? So we've got positioning taken care of, and we've got a shit ton of cash on the sidelines. So when the markets make it a situation where there's no reason to hold that cash on the sidelines, you're losing money because you're holding the cash because they're printing it and because interest rates are low, so lending it out doesn't make you money anymore. That forces that money into the market, and it forces speculative assets like meme coins to move. So that's what we're waiting for, and the setup is nice. It's just a matter of when. And then you talk about, we've got the election coming up, and that's generally bullish for risk assets. We've got, Ethereum has been in like a base, looks like an institutional accumulation for 2 years. They don't accumulate because they think it's going to go down in the long term. They accumulate for 2 years because they think it's going to go up eventually. Same with Bitcoin, right? And so yeah, we've got all the makings that we need for a sustained move to the upside, but it's just a matter of how much pain are we going to have to. Not to mention, we've got hundreds of years of markets generally going up, right? So like, it's just a matter of how long will this move down last. And like you said, there's really not much liquidity for them to seek at this point, because this pullback, I don't know if you guys remember this one, but things got pretty bearish pretty quick here too, right?
Kaz, we can't see. We still see your other
in April, and then we had this. And see, so this is a great example. Look, we had this pullback, these nasty high volume red days, right? But then look, when it goes, look at this gap, right? So this red day, let me zoom in a little bit. This is what you should expect, something like this, right? So we have these nasty days down, right? And then it tried to pull up, it tried to regain the 20-day moving average, close this candle above here, and then boom, a nasty pullback. Then on this day, right, it grinded up, bonked its head on the 21-day, and gave up and closed down here, super bearish, right? And then on this day, it gapped up right here, and then sold off all the way down to the lows of the prior day, and then ended up closing green, right? And then look what happened, a fat gap. That's what happens. That's how they create so much fear. They tire you out, right? So you probably try to get long here, and then you lost again, right? So you're in this base, you get this day, and you're like, oh, we're gonna break out. Nope, you just lost money. We get this day, we get the close above the 21-day. It looks like, oh, look, we're gonna go. Nope, you just lost money. You try to buy the blood. Nope, you just lost money. And then when you least expect it, it gaps up and just leaves you behind, right?
That short squeeze, probably what happens over there is people lose hope, and they say, okay, let's short the market. And then the market says, okay, boom, now there's liquidity for us to take, and it launches.
Yep. And then look, then they go. And then once they get above that range where institutions are accumulating in this range, right? Look what happens. It just rips. Gap and go. You know what I mean? That's a gap and a go. So, and then we had a similar situation here. It got really hairy from the highs. I think we all remember how everyone was riding high right back here, right? In June, beginning of July.
We all remember. I remember numbers I haven't seen in a little while. I miss those numbers.
Right? And then look what happens. As soon as we give up that moving average, and then it gets real hairy. And then just when you think it can't get any worse, right? So now we're in a situation where we're coming back into, if you look back long enough, this is a significant area, and we're actually interacting with that area right now as we speak.
That's a pretty strong support line that we're tickling.
So that'll be telling to see how we kind of if we break or if we hold that area. I assume that it'll dance around that area and do what they need to do. But they might even close some candles down here and create some mass hysteria, right? But when it goes, this is what it can look like. Right? It's a gap and a go. And if you're not ready or if you're not already positioned, you can get left behind very easily. So,
Kaz, can you go back to that other gap and go so both of them are on the screen? What's interesting is the side of, yeah, zoom out a little bit if you don't mind.
does that work?
Yeah, that's perfect. So the first one that happened in March, April, about mid-April, that's pretty small, that movement. Look at the size of it. And then look at the size of what's happening now. So we have a very similar pattern that's playing out. And you got to think like with them actually about to print money's going to have to come back onto the market because, people don't just put money in their pocket and do nothing with it, especially institutions. That money is going to come flying back onto the market. And the movement upwards, if it follows a similar pattern, which says that gap and go, looks so similar actually, like almost like, like a complete copy, but at a much bigger level, it should have an insane upwards movement. But how much more down are we going to have? How much more retail or smaller institutions or some traders are going to be shorting? When does that short squeeze happen? When does it start to move up? I think the end of the month is when we start seeing it move up. I could predict a few. My prediction is a little bit more pain, but if it follows that same gap and go, it's like magnified by a few multiples.
Yeah, that's interesting. It's more volatile. So that's the thing too. The volatility index has been extremely low for a very long time. So this is what those same lines look like on a weekly chart. See that?
Okay.
So this is the same chart we were just looking at, but these are weekly candles. So remember that range that I was saying, and this is the level that we were looking at.
Yeah.
That's what it looks like on a week with weekly candles, right? So you can see this pattern. Here's the October lows, the COVID lows, right?
Yeah.
You see how they'll do a fake out, breakout, and then they'll scare you. And just when you think it can't get any worse and you're definitely going lower, you get the gap and go.
We could go all the way down to around, like, it's hard for me to do a line without my screen, to the 430 mark, even if it hits to the lows of the last one. That's a possibility we could see happen, but it's a pretty
You don't want to
nice
see
range.
that. You want to see it. You want to see those same buyers who pushed it out of this.
Push it again out of here.
Yeah, you want them to still be there. You know what I mean?
No, I'm not hoping for it. I'm just saying, like in the COVID, when we saw that happens, you could see there is a possibility that it goes lower, but whether it goes a little bit lower or it holds a floor here, it should be a violent move upwards afterwards from what we've seen historically, especially when they turn the printers on.
Exactly. And I think that's why we're witnessing the extra volatility now, is because that those factors that we're citing with, you know what I mean? We got all the major, those key factors that can really make things happen. Also, we've got people taking profit. Like, look at this move. People who got long coming out of COVID are fucking in a lot of profit, and they're gonna take profit. But you don't see the volatility index pinned that low for that long. Eventually, it picks up, and that's why you're seeing these giant weekly candles. I think you make a really good point when you talk about it was a lot tighter. These candles, the volatility was a lot less on this pullback. It's getting really gnarly here. Like I said, this was a record week for the Nasdaq.
Are
This
we
is the
just?
biggest.
Did you
This is the
see the
biggest sell-off.
liquidation numbers? Oh man, it's what's that alerts that we all get?
Whale
Whale, yeah. Trying to find where it is. They
Or,
just had
Watcher.guru.
Watcher, yeah, that's what. My brain gets fried, and I can't find anything on my Telegram. I don't know about you
1.8 trillion.
guys.
1.8 trillion.
Yeah,
Crazy.
In liquidations?
1.8 trillion in value. It doesn't say liquidation specifically. It just says wiped out from U.S. stock market in the first week.
Oh my gosh.
Yeah, and I'm going to say this again. I think wide scale liquidations are bullish because I made a post about this too, but the very bottom of this bull run, like to the day, was the FTX collapse when, the largest crypto liquidation event in history, when FTX collapsed and we had a massive liquidation to the downside. That was the bottom of this entire cycle. And both times we've seen mass liquidations, the last, two lows on the high term time frame on Bitcoin have gotten very bullish moves out of it. And so I think liquidations are good. It's almost like we were talking about earlier. It's kind of like that cleansing of the market, cleanse the people out that are too euphoric at the top, and get institutions that liquidity they need to push price up. So I think liquidations are super bullish. And anytime I hear this crazy liquidation and all retail got liquidated a bunch of money, well, that's one thing you'll notice when you start trading when you're kind of a newbie, is you'll be in these trades and they'll liquidate you and then move the exact direction that you thought it was going to go, but it's got to liquidate retail first. It's like this weird kind of rite of passage, liquidate you and stop you out and then go where you wanted it to. And that, is a lot of times what happens in these events. So.
Yeah, liquidations bring liquidity.
Yeah.
Remember that. It might take it from someone, but it gives it to them. It gives it back to the market.
Yeah. Generally, markets transfer money from the inpatient to the patient, right?
Yep.
That's a brutal, it's interesting. Brutal.
Onto something. When you're not talking directly into your mic, it gets kind of fuzzy.
Yeah, it's weird. I don't know. I've never had that happen.
There you are.
It might be because I think it's because I'm so far over on this camera angle. I'm leaning over. When I turn to talk, it goes the opposite way.
Yeah.
I'm leaning over to
this is an interesting chart here because these lines are from before. So I didn't just draw these lines. These lines are from when those are current, when that was happening. So here's the weekly chart, right? This is ETH.
Mm-hmm.
I did just draw this line just right now. But you can see, when these flags happen, look what happens when it breaks out, right? Unfortunately, we failed on this one and we pulled back, and then we held this level from before. So that's the weekly chart, right? So look at this, for instance, this consolidation. Look what happens when it breaks out. It failed twice, right? But when it went. 1, 2, 3, 4 weeks. And now we given all that back. And we're back to where we started. So, you hope that those same buyers who were there to create these candles are gonna be still happy to be buying these prices, right? I think they will be. And that's why I continue to hold my ETH.
We had a pretty strong double top there. You could see it tried, and it just wasn't able to break free. Yeah, right around there. It's basically a double top. But one thing that's important is right now, and I don't know if you have it available, if you look at the Bitcoin dominance chart, it's just starting to break down a little bit But I think the Bitcoin dominance chart needs to drop before we see Ethereum do anything really big. It will follow Bitcoin. It will go well if Bitcoin goes up, but it's never going to be able to fully break out until that dominance weakens. And you can see here it's like stopped a little bit, but it's just been marching upwards. Like there's no indication of alt season yet until that starts to fall.
See, Bitcoin dominance is not something that I'm super familiar with. Actually, I don't know much about. I don't use Bitcoin dominance. I know that it basically it compares Bitcoin to the rest of the.
Storm,
Yeah,
you want to throw your chart up?
I literally just dropped a video on that like yesterday, Kaz. You should check that out. It's
don't
pretty
know much
good.
about the Bitcoin dominance.
For alt reason, it's like knowing when altcoins, like if you're heavily invested in altcoin or meme coins, I think it's super important to track. Basically what it is, it's tracking what percent of the entire cryptocurrency market cap that Bitcoin encapsulates. So like if we have a total crypto market cap of, let's say 2 trillion market cap and Bitcoin is 1 trillion market cap, then it would be at 50%. So it's in percentages because it's like what percent of total market cap does Bitcoin encapsulate. It's important to track because you can chart
Storm,
it. Just
do you want to throw your screen up? You had some.
yeah.
I mean, this is something you know.
Hey, look at this.
You know a lot.
Before you do, Storm, look at this. This is total crypto. This is total 3. So this is total crypto market cap, mine excluding BTC and ETH. And look at that downtrend.
Yep. 100%.
So
yeah, that's
basically the opposite, right?
Perfectly
Exactly.
tracks as an inverse.
It's an inverse. Yeah, it's the exact opposite. Exactly. So yeah, let me share my
Go ahead and throw yours up.
I'll throw mine up and see if I can do this.
I feel very rich and analyst over here. It's like, let's throw it over to Storm Trading right now from Left Side Capital.
All right, let me know if my mic's messing up. But
hang on one second.
So
I'll get you up here.
All right. Sorry, this is all drawn out from that last video I made, but let me delete this.
No need to apologize.
So you can see Kaz like pretty easy, right? Hold on, let me get some of this off because it's kind of confusing. But you can kind of see where the last 2 altcoin seasons happened, right? Like this was, and I drew this box. I drew this box not from like putting a box around the red candles, but I literally looked up like when is considered meme coin season from the 2021 bull run, and these were the dates that it drew. And it's like so clear, right? When Bitcoin dominance tanks, that means altcoins are getting the liquidity, right? And this was the one prior to that as well. Again, very, very sharp, like 3-4 candle, 40% decrease, like very obvious, right? This blue arrow and where I labeled this is when we started this bull run, right? So this entire bull run, we have seen 0 weakness on the Bitcoin dominance chart, which to me basically tells you like, yeah, because I'm sure you guys have heard this too. A lot of people are like, oh, we already had meme coin season, like with what Pepe did and some like Brett and some of these other coins reaching multi-billion market caps. Altcoin season's already happened. It's over. And my question would be where, right? Like historically, it's very clear these 2 boxes are where we've had like altcoins. This was more of just an altcoin season. This was like the meme coin, Doge type stuff. But like where in this cycle have we had anything even remotely close to this? Like we've had maybe like, 1-2 week periods where like altcoins have slightly outperformed Bitcoin, but on the macro scale, it's been almost straight up, right? And so next question you'd be asking is like, where do we find resistance? And one point I made in my video, and this is just my theory, but we can see obviously this chart is on like a very strong downtrend. And I think historically it might always kind of be like that, right? That's why I drew this blue line, because I think it's extremely unlikely that Bitcoin dominance gets above 72, 73%, because this was the height of last cycle's Bitcoin dominance. And I think each cycle, the meme or the cryptocurrency ecosystem will become more and more diverse with more altcoins, more meme coins, and that cryptocurrency kind of the slice of the pie that Bitcoin encapsulates will kind of be smaller and smaller. So I think this blue line is like my line in the sand. I think it's almost impossible for Bitcoin to dominate more than 73, 74% of the total cryptocurrency market cap. So you have this zone right here of like, where are we going to bounce from, right? So from like a technical standpoint, I'm big into fibs and sideways volume charts. And so this seems like a really likely, like around 60% to 62%. This zone right here, I could really see us getting a rejection. I don't think we're like near the top. Well, we're near the top but on a macro scale, but like I would be surprised if we reject from here, because what needs to happen for all of altcoins and meme coins to really pop off and have that meme coin season is for Bitcoin to break its all-time high. I think the cryptocurrency market in general is just so kind of fearful and indecisive because Bitcoin hasn't really proven it's going to continue its bull cycle to the upside, break that all-time high. But when it does, right, when Bitcoin really does get that short squeeze to the upside, then the whole cryptocurrency market's like, oh yeah, wait, we are in a bull run, right? All that fear that we've had the last 3 months is irrelevant now, and you'll see people start to ape back into the cryptocurrency with massive amounts of volume, almost like FOMO buy-in. And what are the assets they're going to look to buy? Historically, it's always been altcoins. They want that higher risk, higher return asset. And I made a whole video on that too, about how every previous cycle, altcoin season was immediately triggered by the break of previous cycles all-time high. So my prediction is like we're going to get one more like quick move up on Bitcoin, because when Bitcoin breaks its all-time high, we're going to see Bitcoin dominance, have a big candle to the upside. And as soon as that happens, we're going to see that rejection. And so I could see this being a really good area. You have a lot of chop and price action in that 60 to 63% area. Whereas like, anywhere in this zone that we've been moving through, there's no resistance, right? This was straight drop to the downside, no resistance in this area. But as you get kind of closer to 60%, now you're running into like 618 value area high, 60% psychological, all that sort of stuff. So anyways, I think this is like very important to track if you have altcoins, because you want to, if you're investing in altcoins, you want to know when is it going to happen, or have altcoins performed well. If during that Pepe cycle that we had, like whatever, 8 months ago, 6 months ago, we saw like these massive red candles to the downside, as an investor, I'd be kind of like, uh-oh, like was that meme coin season? Have we had it yet? But like, to me, people saying we've had meme coin season already are on crack. Like where have we had that? Like Bitcoin's outperformed meme coins this entire cycle. So
we have a good question from Spike. Before we bring that in, do you think that the institutional buying of Bitcoin is going to counteract all the new tokens that we have and all the new chains that are existing? Like last time we had less crypto, literally less crypto and less chains, but we also didn't have institutions buying it. Do you think the institutions buying it will still help it match the previous dominance, or is that not going to be enough to offset the new coins, tokens, and chains that we have this time?
So is he saying like institutions buying Bitcoin will like push Bitcoin dominance higher? Is that the question?
Yeah.
No, I think
that's a really good question, though.
It is a really good question, but I also think that, well, first you have to understand the way, the whole leverage fractal idea and how money flows throughout the cryptocurrency ecosystem. The better Bitcoin does, the better it is for altcoins and other cryptocurrencies, because money flows down through the markets. It starts in the high caps at Bitcoin, and then it'll flow to Ethereum and then Pepe and further down the line. So in terms of Bitcoin dominance, though, I think institutions are interested in meme coins. I think institutions aren't just interested in Bitcoin. I think institutional money, we heard a lot of rumors about this, I feel like 3 or 4 months ago, and we've heard that kind of die down. But I do think institutions are interested in meme coins. And I think the more institutions push up high cap tokens like Bitcoin or Ethereum, those altcoins will perform even better, because a lot of the people who are holding coins like Bitcoin, that money is going to flow down the market into like higher risk assets like Pepe
So
or bread.
the institutional money is not separate from alt season. You think institutional money is also going to flow into those altcoins, and
Yeah.
because of that ratio, that dominance of Bitcoin is still going to be lower because there are more coins out there, more chains, more options.
Yeah.
Interesting. Honestly, it seems like a win-win to me, because even if the dominance goes up, it still always turns over to the altcoins, and if it doesn't go as high, it's still going to turn over.
Yeah.
So
And that's what's
regardless,
funny.
it's a good thing.
We had Pepe run up to whatever it hit, I can't remember how many billions it hit, but we had those coins perform that well with Bitcoin dominance doing this. So even if Bitcoin dominance does continue higher to 65, 67, 70%, those altcoins should still do extremely well, right? The entire cryptocurrency market benefits from Bitcoin moving up. But I historically think we're always going to see high risk assets have volume, have that surge of volume, and regardless of if institutions are the one kind of holding up and pushing Bitcoin, retail will always be interested in high risk, high reward assets, and that's these massive red candles to the downside. That's retail coming in and just euphoria pumping coins, Dogecoin, etc. And so we're gonna have that this season for sure. I think I think there's always a place for high risk assets in the market, regardless of if institutions are involved or not. So, but that is an interesting concept, to see maybe Bitcoin dominance goes a little bit higher this cycle because there's more institutional money in Bitcoin. But I do think institutional money is interested in altcoins as well, not just Bitcoin.
No, it's great. And to give people a time frame on this, I've been using the halving. I like to find like dates that make sense as sort of a base for what you can think what's going to happen next. In 2020, the Bitcoin dominance chart hit a peak on January 3rd, the 2020 bull run. It hit a peak on January 3rd of 2021. That was 237 days from the halving. And if we looked at our halving and plotted the same amount of days, that would put it December 17th of 2024.
Yeah, well, that's right where my little peak was. But
So it's interesting though how they follow, like where you're putting your peak, and then I just brought not an uncorrelated but a different data point, and it sort of lines up really nicely.
yeah, and this is obviously speculation and whatnot, but I think the general idea is we see a massive surge up and then a massive rebound down because Bitcoin gets all this money. Like I said, Bitcoin hits price discovery when Bitcoin breaks its all-time high from last cycle, right? Like once it breaks that last cycle high, then you're going to see, because a lot of like normies, and I'm talking normies that aren't even invested in crypto. If you talk to them about like Bitcoin and cryptocurrency, they have no idea Bitcoin was like right next to its all-time high. Because I broke my wrist like a couple months or like 3 months ago, and that was kind of right when Bitcoin was like knocking on the door of all-time highs, or like kind of starting to breach it. And I remember talking to some of my physical therapists who were just asking me about crypto, and I told them the price, and they're like, "Well, I thought Bitcoin was like dead. I thought it was like 20K." Most people like that won't hear about Bitcoin or cryptocurrency until we get that break up, and then once we get those new untouched price levels, it's going to go viral, right? Everyone's going to hear about it. It's going to be on the news, and it's just that's when historically that price discovery modes happen, and when that happens, when retail floods in, retail tends to buy higher risk assets outside of Bitcoin. And I think that's my explanation as to why altcoin season always is triggered by the breaking of previous cycle high. So
I know, I completely agree. And it's so interesting from what Kaz was saying um, with the general market, how that rate cuts are going to force them to bring that money back onto the market because they're not going to make money just going and doing. I can turn that off for you if you want. They're not going to make money lending anymore. Those days are over. So they're going to be forced to bring it on and start buying. Then the Bitcoin dominance chart is lining up for it to start going down, both from a charting perspective and a historical perspective. I think that this pain is going to be over soon, but not immediately. It's going to be a week or two more of chop, maybe 3 weeks, because it never follows anything that we want it to. But I don't see it lasting much longer than that. And everything seems to be shifting into a real bull market, not just something we're waiting to have happen, but an actual start. Spike has a great question over here. I'll put it on screen, but it's pretty long and it might cover everything up. Okay. Do you believe, and I'm not sure if you guys can see the chat, do you believe in the third cycle curse and that Ethereum being in its third cycle will underperform in this bull cycle? If so, how will this impact alts and meme coins? So do you guys think that Ethereum is going to have a rough time this meme cycle? And I'm not sure where the third cycle curse comes from exactly.
yeah,
I've never heard of the third cycle curse.
I haven't either. I was going to say I've never heard that either, but I think Ethereum underperforming this cycle, I could see only because the altcoin, like kind of the whole like Ethereum meme coins, and it's been more diluted with other chains, just like Solana and Con and Base. Like I could see Ethereum underperforming only because of how diluted the whole altcoin space is in that regard. But and you have a lot of new, more like hyped up chains like Solana specifically, which Solana has done extremely well when compared to Ethereum. But I've never heard of the third cycle curse, honestly, but I also don't put much weight into like curses when I'm trading personally. But and if something like that does happen, it's kind of the whole idea of like self-fulfilled prophecy, where like people believe in the third cycle curse, and so they trade according to it, and then that's how the markets move because people believe that. But I don't put much weight into any of that. And honestly, if anything, if retail believes in the third cycle curse and that becomes a thing, I'll probably counter trade it, to be honest with you.
I don't know what the third cycle curse is. I wish I could comment on it. I don't have much knowledge about it. I'm trying to pull up. Does anybody have a subscription to Google Active?
Subscription to Google?
So did you say Google Active?
No. Do you have a subscription to Google Active? As in, can someone Google what the third cycle?
I thought that was like an exclusive like paid Google.
I actually have Gemini, which is a paid service, which is great. It actually is like a ChatGPT alternative. So I do have that, but I don't. I was just going to Google this.
So my thesis on is that ETH is going to outperform everything personally, because I like to look at where a couple of things. I like to look at, first of all, where big money is investing. So I mean, if you look at like BlackRock and a bunch of other big money like conglomerates and companies, they're investing big time money on the Ethereum chain, right? So I like to look at that, and then I also like to look at where smart people are going to work, like graduates, like the brightest people in an industry, where they're going to build, and it seems like a lot of them are going to build on ETH. So I like the fact that ETH generates money. I like the fact that the L2s are coming in to create like a really user-friendly UI. I think this bull run is going to be the bull run of user interfaces. So I think what holds a lot of people away from like transacting on chain and just interacting with crypto is the user interfaces are a bit clunky, and people feel like they're getting scammed, whatever. They don't feel safe, and I think that there's a lot of big money coming to solve those problems. I always say, you show me the incentive and I'll show you the result. So there's a lot of incentive on the Ethereum chain to go ahead and fix the user interface problems. And I think that that's going to happen. I mean, you can see, for instance, Coinbase has Base Chain and the smart wallet. And the thing about Ethereum is that there is, I think, something like 17% of all Ethereum custodied is custodied on Coinbase. So if Coinbase can execute with the Base Chain and get those fees lowered, get the user interface fun and easy to use, they're going to create a lot of volume on that chain. And what's great about that is that they don't need to go searching for the liquidity. It's already there. Like, it's there. So then the incentive is there too, because when they start seeing like shows like us explaining, we just hit a 100x on this coin, 1,000x. Let's be honest, people are going to come to these meme assets looking for. They're going to be looking for gains. You know what I mean? Like the community and the education and the art. These are all things that are great and I love, but they're auxiliary to the monetary gains, right? So if or when this bull run really starts to take off, I think the Ethereum chain is extremely right to get people really moving around all that liquidity that already exists, get them to be moving that around and interacting with these assets that we're building right now on the Ethereum chain. So I'm extremely bullish ETH. I'm extremely bullish ETH L2s and user interface, using those L2s. And because of that, I'm extremely bullish Memecoins and even honestly, even NFTs on the Ethereum chain. So
Yeah, that's. I have an unpopular opinion too. I think NFTs will make a run this cycle, like they have every other cycle. Personally, I know everyone wants to. Hey, I know everyone wants to say NFTs are dead; they're never coming back. But they say that about everything, and somehow
I'm extremely bullish NFTs.
Yeah, I don't know if I'd say extremely bullish for me, but I think they're going to have a fad cycle, whatever you want to call it. This cycle, they'll come back at some point. But
do you guys remember Pokemon Go?
Oh, of course.
During COVID.
Yep.
Okay, so that was, in my opinion, like the first instance of augmented
I remember
reality.
that. Can you remember people? I was seeing people who had never seen sunlight in 3 weeks, walking around parks and walking into ponds and like just not knowing how to manipulate their legs and stuff in actual reality.
So that's how augmented reality can really. You can see that it really did get a lot of interaction from people that you wouldn't expect to be interacting with it. So I don't know. And these were like Pokemon that you could just go around and find. So I mean, imagine like for instance, like I love my PFP. Gives me a feeling like you would like the logical mind would, if you were to say, like, if you didn't know what you know, and I were to tell you you're gonna pay me 100 times more for this cotton shirt because it has this picture on it, you'd say, no, I'm not. But the reality is that people are lining up outside of stores to pay 100 times more for a cotton shirt because it has some art on it, or because it has some community tied to it, right? Or has culture tied to it. And so these digital assets, these one-of-one digital assets or NFTs, they have culture connected to them. They have community the same way any art or cultural objects do. And the more and more we interact online and with technology, the more, and especially with crypto, the more and more people are going to be able to wrap their heads around digital assets and the value of digital assets. And that's the general thesis. But I think especially these OG NFTs, especially the hand-drawn pre-AI illustration NFTs, I think they're gonna be a badge of honor, like for the ones that, like, people are gonna look at you if you have one of those as like a trailblazer or somebody who was here early and interacting with these chains. Because once these user interfaces hit and people realize that this is a way more, because throughout history the free market has always won. So and water flows. Money flows like water. So it wants to take the path of least resistance, and that's precisely what crypto offers: is a path for your money and for value to flow with less resistance than what we have now. So yeah, I'm bullish all sorts of digital assets, and I'm bullish art, and I'm bullish digital art, and that all leads me to NFTs. And so yeah, I think NFTs will, especially if somebody figures out how to create liquidity pools for these NFTs and makes them more liquid, because I think that's one thing that kind of holds them back. But people don't realize in a market that is absolutely ripping, and people can't get enough of, when people forget, but like when the market is ripping, people were like, well, there's no liquidity. There is liquidity if there's a huge demand for these very limited assets, right? We're talking about some of these NFTs are out of 2,000 or out of 10,000. And if you've got the type of action happening on chain that some people are predicting, then having a liquidity pool is going to be unnecessary. People are going to be begging to buy these things, in my opinion.
So I want to. Yeah, sorry, Saucy. Go ahead.
I was just gonna say NFTs are dead, but in case they're not, um, I think that I mean, I just really hope that some innovation happens with them. We were having a conversation about fantasy football yesterday, and the idea of using NFTs and being able to like um, have a league in which you mint your team, and there's money that's put into the league, and if the league gets big enough or has enough credibility, you could sell your team, and and then there's a lot of these conversations about social tokens and things like that, and then NFTs would be great from that aspect, and then you also have the art aspect, and so you look at I don't really know what Sikasa is doing with Jungle Bay, but I know that they're cooking up something that
Everything.
goes a lot deeper than just cool JPEGs, and then 10,000 cool JPEGs or 5,500 cool JPEGs or whatever, right? And so I agree that yes, you're going to have a part of the cycle where people want to take their fresh new liquidity and they're going to want to go and participate in the status symbol that is an NFT and a PFP, right? Um, but if we want NFTs to be taken more seriously, then we need to innovate how they're actively used, right?
Yeah.
I
Well,
love what
that's
you were
my take
saying.
too. So, oh, sorry, Blood. You go ahead.
Oh no, no worries. Everybody, go before me. It's okay. I'm in no rush. Storm, go ahead.
No, I was just gonna say quickly too. I think NFTs. The thing that excites me about NFTs is the potential utility behind them, and I know that that's kind of a buzzword and whatnot, but there are so many different ways that you can use the blockchain to verify things like concert tickets, right? Not just the art, but there's so many use cases for NFTs if they're used correctly. And I'm not saying that everything's gonna happen this bull cycle, but I think long term NFTs are a super innovative idea, and I do think they'll catch on at some point. Um, but when that is, I don't know. But I'm more bullish on the utility of them. I think the art's cool, and I think there's use cases for it. And the PFP stuff, it has a niche community within the cryptocurrency community, or a niche aspect in the cryptocurrency community. But I think there's a lot of really cool use cases of NFTs when used correctly, and we've yet to see that. So,
I I agree. I think like mortgages, birth certificates, social
yep,
security number,
yeah,
cards
all
should
that.
be all. They
Yep,
should all be on NFTs, right?
exactly.
I mean,
And I
Larry
think,
Fink said everything's going to be on ledgers. Everything. He's
yeah,
not going to. Dude. Also, do you guys know? No, I feel like this was on the front page for like one day, but like he literally they put a meme coin out. It's called Buildle. So it's obviously a play on the word hodl, and it's on the Ethereum chain, and it's for accredited investors. Minimum buy-in was 5 million. Look it up. Larry Fink has a shit coin. It's called Buildle.
Wait, you
And
said minimum buy is 5 million. Why are we not talking about the coin that we're all obviously holding as accredited investors buying $5 million a pop of a shitcoin? Like, why don't we
yeah,
focus on
Buildle.
our primary holding building?
Yeah,
But
I
he's
don't know.
also
We should be shilling it. Huh? What are we doing?
I want to rewind because there's a couple of topics that have been really interesting that you've brought up. Um, Back to what you were talking about Ethereum and how the Ethereum chain is going to perform. And I've been saying this, and it's interesting that you are like the only other person I'm really hearing saying this. Ethereum is a profitable chain. It makes money by, you can make money by validating, you can make money by transactions. All of the oracles basically run off of the Ethereum chain. It's something that has the ability to mint or not mint based on how they want it to work. I think that a huge amount of interest is going to go into Ethereum because no other chain has that much built on it, from the L2s to the profitability of owning it itself. Bitcoin is a store of value for these institutions. It goes up, it's deflationary, it makes money when it goes up, but it doesn't do anything. Ethereum does so much that
And it's
that's
doing
the
more and
reason.
more every day.
Yeah, and that's the reason why they're going to flock towards it. But right now, they probably love accumulating it at these types of prices. So, like chains like Solana, yeah, There could be a Solana ETF in the future. There could be a Tron ETF, but none of them do anything remotely close to what you can do and earn with the Ethereum chain and the control and access that these institutions would have towards other tech. So I think that's really important for people to understand. It's a working
And
chain
if you
Ethereum.
understand, Blood, to how great of an asset software is, right? As far as ROI.
SaaS,
So with,
it's you build it and then you charge.
there you go.
It's so different because you don't have to build that every single time. So they're going to have access to building and tools that nothing else, nothing even remotely comes close to what Ethereum has, in my opinion.
And it's
So
buildable.
I,
If you're an institutional investor, that makes way more sense. For an institutional investor, buying software makes way more sense than buying Bitcoin. I'm just saying.
yeah, because you make that money way
Yeah,
more.
it actually generates a return.
Exactly. And then when you talk about BlackRock, BlackRock on the blockchain, BlackRock. BlackRock's also really big with the RWA, the real world assets, things like Ondo and places like that, because they want to have the ability to circumvent, in my opinion, because I'm pretty sure they're always greedy, and I'm not hating them for it, but let's just use our common sense. Dom says, shout out to Saucy and Kaz, two of the most dangerously based Chads out there, 100%. And I also want to give a shout out to Storm, a legend of his own, needs no shout outs. But Ondo, BlockRock, Ondo's going to give them
I
this.
like it.
Actually, it's sort of catching on, BlockRock. It's like, Nordstrom Rack to Nordstrom. We could be like the BlockRock to BlackRock. Ondo's giving them the ability to not only take things onto the blockchain, but find a new way to buy everything that's possible. That's what they want to do. They want to onboard crypto, and then they want to onboard everything in this world with both crypto and regular, transfers of assets. So it's going to be interesting to see how they use that. And can you imagine if we see SaaS take off like we have like the tech sector, but it goes on chain, that tech sector, but it has a much deeper level of control that they can have. Like there's no way they're not thinking about that.
They love control. Once you have all the money in the world,
Data.
or as much as you could ever need, what's real value to these cats is control. And yeah, the blockchain gives you that in spades, man. And yeah, I think another thing I'm super bullish about Ethereum is everyone talks about how gas fees are too expensive, so retail investors aren't going to want to spend all this money on gas fees, yada yada, right? They're going to use L2s to create batch. So you're going to be doing, for instance, like transactions on these L2s, and you'll be able to have like a dollar balance, and you'll be able to trade across all chains, all assets with the click of a button immediately, right? But what's going to actually happen is those transactions are not going to be happening on chain immediately. What will happen is they will go ahead and they'll figure out ways to like secure the assets without actually making it happen on chain, right? And what they'll do is they'll take a bunch of transactions and they'll batch them at the in the most efficient ways, and they'll be able to bring the price of those transactions down like exponentially to the little guys, right? By batching these transactions. That's like just one way that they can use L2s. And smart contracts, the malleability of smart contracts. Oh my god, dude, they're gonna have a field day. The stuff it gets me so excited just to think about how early we are as far as innovation, particularly on the Ethereum blockchain. I also really like Algorand, which is like basically like another type of like Ethereum, but that's a whole other story. But
I
But
think
yeah,
there's a lot of great chains out there, and things being built, but nothing has the size and the actual use that Ethereum has shown to have, from itself to the L2s. And that money is going to come from the institutions. We already have Ethereum ETFs happening. That's why I love that Blood Boy is on Ethereum. I think that money is going to naturally flow so easily onto the Ethereum chain.
yep, I agree.
I see way more on Ethereum for meme coins than any other chain.
Oh
What do
yeah.
you think, Saucy?
All my favorite meme coins are on Ethereum, bro.
That's why we
Um,
chose. That's why we chose Ethereum for FOMO as well. FOMO on ETH. So
um,
I
Oh,
think
nice.
I really think, also shout out to the viewers at 600, about to crack 600 views. This is really
Yeah,
cool. This is the first time I've done this. It is really cool. I think we need to do more of this. But I'm
600,
sensing
Saucy. 617, flying. And
fucking
this is on a guys. This is on a down day. Understand? We're here, still here building. There's
yo.
good things happening soon, guys. Sit there.
So I while we were doing this earlier, I entered 100x leverage on Sol, and God, dude, it was almost the most perfect entry, but they fucking went down and got me. But it was almost the most perfect entry. The low on it, the low on it was like 120.59, and my liquidation was like 120.70. So it's just stupid. Anyways, can can we get to the part where I can show my bags, blood? Okay.
If you
Can
start
we?
with Blood Boy, you can show all your bags. No, we could let's talk full meme coins over here.
I, I like it.
Totally down. Talk to me.
Um,
Tell people.
I obviously love Blood Boy. I think
Let's
that.
hear it. Drop some alpha.
Well, God damn it, I had something in my mind, and now it's gone. Um, so I was reading through the comments earlier, and there's a lot of people that were asking, or one person in specific was asking, if we're going down more, are we going down more? If we are, I want to sell, right? And we hear that a lot with meme coins. And the truth about meme coins right now is that there's no liquidity. There's an absolute dilution of memes. Okay. And so the thing that I want to talk about more so than um, specific memes is just what memes should be doing right now, what meme coins should be doing right now. And what meme coins should be doing right now is solely focusing on community. They should be they should be treating community like it is gold, not that they have to buy or anything like that, but that they have to mine. And everybody that they're looking for is out there, and there's just not enough people that are marketing the things that they're excited about. So I want to go back to this person that said, if this ain't the lows, then I'm selling. And it's that type of lack of confidence, not nothing against him, because this is what is important. Is that type of lack of confidence that also keeps people from marketing their meme coins, which is what community building is, right? And so what I'm doing right now, and what I did a while, like a few months back, is I consolidated all my bags, and I went through. I'm like, okay, what projects have great communities already, or could be great communities, great leadership, great team, great content, right? Because I need to consolidate into something that I can shamelessly go out and talk about, that I can really enjoy, that I can confidently talk about. That when things are going down, I can refer back to my fundamental beliefs of, hey, I want to hold this meme coin for these reasons for 18 months. So what happens now doesn't really bother me. I'm not tempted to try and sell red candles to buy back lower, because that's really, really hard to do. I'm not completely thrown off my thesis on every red day, but that confidence is the same thing that allows or keeps people from building communities and tokens. So I think for meme coins right now, it's each individual has to decide, hey, what meme am I really confident in? What community, what leadership, what content, team am I really confident in? Because at a time like right now, when there's very little liquidity going around, it's very hard to get coins launched. I think, what was it today? There was only four coins launched on Pump Fund that hit 100K market cap. Just insane. There's no liquidity. There's no liquidity. So the best thing that we could do is go and say the most value that I'm going to get from my time and efforts right now is finding the things that I can be confident enough and to help build a community on, to chill, to talk about without feeling like I'm going to hurt somebody, right? And then going and just absolutely being psychotic about that. That's what I've decided to do right now. Um, and I love Blood Boy. I think Blood Boy is a great value for all the reasons that I talked about. It is the only real, Matt Fury character that is a market meme. And it's extremely cheap right now. It's extremely undervalued. I started buying Blood Boy at like 2 mil, 1.5 mil, and bought it all the way down. And I'm still buying it. I've got Snigoo and Dodo because of the holders that have it and the community that have it. But my main kind of babies are Stonks and Bobo. And Bobo's not, my baby. Bobo would be fine without me. But I love the community of Bobo. I love what Rek Takashi is doing. And these are communities and leaders that are willing to operate a meme coin like a business. Okay. And uh, so that's what I'm looking for, and I think that Stonks does that same thing. So as far as meme coins go right now, it's really hard to speculate or be like super bullish or whatever because there's no liquidity to keep the ADHD mind busy, and so we got to get back to the grassroots approach of building communities is kind of what I'm thinking about a lot over these past few days.
I think you're really right about that. Everybody should definitely pull up to Kaz's space a little bit later. That's coming up here for the FOMO token. But all the things that you're saying, Saucy, tokens need to be thinking about being different. They need to think about survival. They need to think about differentiators. And I can tell you this much: if you are building an amazing community but no one knows about it, you're not going to get anywhere. So that's why we do live streams and other ways to build that engagement, to get new eyes. So it's important to build a great community. And then I think it's also important to have that reach, awareness, and engagement to let other people know about this great community so that they can find you. Um,
Yeah, I
that,
love what you say, Saucy, all the time about being a door greeter. Like we're the greeters. We're the ones who are early, right? Like we're the ones welcoming the people theoretically, and building these communities so that when they come, there's a nice, clean, beautiful place for them to be. And
Yeah,
I appreciate this Blood Boy. Like this is super cool, man. I'll do this any day. This is fun.
yeah.
no, I'm happy it all worked out. We got to come together. And I think the conversation has like stretched across so many different interesting topics. And I really want to bring like awareness and education to people so that it's not just, silly, it's like not the silly memes. It's not just like pictures and stuff. People can get some quantifiable data of where we are in the market. I think you and Storm bring unbelievable wealth of knowledge. It helps give confidence to this market. People can tune in and see, hey, what's happening next? Why is this happening? And an educated consumer is always better. So no, thank you guys for being on here, and thank you, Saucy, for being on here. You bring amazing perspective on things. And yeah, if you're not greeting people when you're early to a project, if you're not welcoming new people into the community that you built and making them have the same feeling that you have as a community member, they just leave. But if you give them that warm welcome and you get people to that door to welcome them, those coins are going to have tremendous success.
I wanted to add, and I appreciate that, guys. Thank you so much. I wanted to add something else because another thing that I always talk about is that there are too many secret agents, right? And as a just theoretically, when you look at stuff like this, what's going to make it last and what's going to make it crumble, right? Um, and so you look at a project, and when you have someone in a project that, you know, is only asking what can that project do for me in the short term, right? When moon, when marketing, why aren't we going up? What is the team doing? What's next? Right? If that's the only thing that you're asking, what you're actually doing is you're hurting the project. And if you do that while you're being a secret agent and not talking about it, then you're really compounding the negative effect that you have on that project. And when multiple people do this, that's really a death sentence for a project, right? And so if we continue to have individuals that participate in the things that they're buying that way, then it's really bad for a lot of projects. On the other side of the coin, um, if you can get out there and you can talk about it and you can be educated and you can build confidence in in what's going to happen, or at least what you think the market is going to do. You can look back at cycles and say, hey, I think that we're going to continue to go up. I can see some similarities between what's happening right now and what happened before the last parabolic run and election. And, look before that and you see the same similarities and you start to think to yourself, um, what has happened kind of is always what does happen. And people say things are different or this time it's different. Rarely is it, right? So when people are being secret agents and they're not wanting to show, what it's rooted in is a very big lack of confidence that is perpetuated by greed. And so what I mean is people are being greedy because they want a result of massive X's, but they're putting their money into something that they're unconfident in and they won't talk about it. And then when everybody else isn't doing the work for them or the market isn't pumping, they now become a detrimental liability for that project. And when you get a bunch of that happening, that's when you start to hear these things like, oh, meme coins are a farce, or intrinsic value actually is important, all that stuff, right? Because meme coins are a really special thing that are really just raw representation of peer-to-peer transaction and a group agreement that something has value and we're willing to trade it for that value, right? And so I think that right now people should really be tightening up what they're buying, what their expectations are, get their greed in check, and find project. If they want to be in the meme sphere, they want to find projects that they feel comfortable openly talking about, because that is the only way they're going to help the project.
Especially in times like this, right? Um, and this is when the building is done. So yeah, I couldn't agree more. It's like these things. It's not like you're not buying the shares of a company yet, right? That's um, generating income, right? That'd be great if some of these memes end up doing stuff like that, and I could honestly see that happening, depending on which ones you're buying. But yeah, no, I think that's something I like to talk about too. It's really interesting. I think we're going to look back on these times in the future and we're going to realize, holy shit, what we were doing was more important than we realized while we were doing that. Like the ability to build these communities and mobilize large groups of humans and get them to actually push the button, like take their, like buy, like download the wallet, take their money, put it in to the Solana, buy the coin, put it into ETH, buy the coin. Like this is something that say like the companies will pay a lot of money for, like to be able to build a community and mobilize people, and it's really important. So there's that. I think people are beginning to like kind of master that. These people in this meme coin space, and it's really cool to see. Um, and then even more importantly, I think is the fact that we're able to come around these ideas, these memes, and build these communities and give value to a token that otherwise would have no value. We can all agree, yes, this token is worth this much, and I'm going to pay that much for it. Like that's actually really important. And I won't go into why, but you can extrapolate that, and I think over time will tell why that is extremely important, especially when you consider um, this is crypto. This is a new thing, decentralization. You know, small groups of people coming together and agreeing on that a coin that we have created has value. Like it's
Dude,
it's important.
it's what you said, that we don't realize how important what we're doing right now is crazy. Because yeah, and yes, it is a cesspool. Yes, there's a lot of liquidity draws. There's all of these things, right? And some people hate meme coins, but understand that we are at a point in time where we can create new stores of value, in the sense that we can decide what we want to trade with, right? We can decide what a real worth of a community is. When Pepe gets 1 million holders and people start saying, you know what, as a group, this is more, we trust this more than the dollar. And I'm not saying that's going to happen, but it
But
could
we'd
happen.
rather own this than those
We
dollars, at
Yeah, we'd
least.
rather
Yeah.
own this than those dollars, and I'd rather trade with you in this than those dollars. What you seriously have the antithesis of what I think Satoshi was wanting, right? And so meme coins are the first thing in crypto that do that transparently, because prior to that, what we had a bunch of utility tokens that had no utility, had empty promises. They had bad actors stealing money. They were just intrinsic Ponzi nomics, LARPing as utility coins, right? And now we have real community tokens that can build, and you could build a foundation of I don't want to use this word, but for lack of a better word, a foundation of trust and trade, right? And so I agree with you that we could be on the precipice of something very special as the digital financial environment scales.
I
and,
think
and also just to be clear, oh sorry, Blood Boy, but just to be clear, the space later, what we do is we just get together. I think it's important to bring people into the space to tell stories of success. You hear there's so much negativity online about crypto in general and how it's all scams and all this and that. So what we do on the FOMO Friday space is I have traders come on and tell the story of their best trade. The trade that really moved the needle for them, or some interesting trade. And so that's what we do. I feature two traders. They tell a story of like how they turned a tiny amount of crypto into a large amount of crypto using the meme coin space. And then we go really into detail on exactly where they bought, why they bought, how it made them feel, where they sold, how long they held. Like we go really into detail so people can go ahead and, first of all, it's just interesting to hear these stories, and second of all, it can be educational. So that's really what we're doing. And then I mean, we're also going to talk about some coins and stuff, but yeah, that's what FOMO Friday is about. But
and
so we'll be
everybody
doing that at
better
five
be
five
there.
Pacific Standard Time. Yep.
What was the time you said? Pacific. So 5 p.m. Pacific Standard
He
Time.
said
Yeah.
he said
If, yes, Saucy said. Yeah, you guys have to be there, or the market disappears. No, it's great what you guys are talking about with the engagement and the communities and the platforms, because utility tokens without engagement are a meme coin. They're nothing. Or adoption. If you don't have engagement or adoption, you really have nothing. A meme coin that has adoption and engagement can be a platform for future utility. It's more important to have adoption and engagement and an active community than it is to have a utility token that might promise to do great things, but no one uses it. I invested in a project early in this cycle, and it was really amazing. And it had people from Silicon Valley. It had all the things that you would want for it to go well. It went from like $200 to $3 because they couldn't get people on there, they couldn't keep people engaged, and they couldn't get it to actually work. And there's meme coins that have gone the opposite way. So it'll be really cool and exciting to see, like for us, where we have the media platform that we're working with the crypto takeover show, or just now like what we're doing with all these amazing people, Kaz, Storm, and Saucy. If you have an engaged audience There's tremendous potential. And that's why I think like Vitalik has actually engaged with memes recently. Justin Sun has all these chains realizing that memes are the greatest adoption tool that they'll ever have. And if you have that adoption and that engagement, that's going to spill over into the rest of the crypto world. So building our communities, building up the meme coin world is one of the most important and bullish things for crypto in general, in my opinion.
Yeah, couldn't agree more.
Guys, this has been, thank you everybody for tuning in. I am blown away with how many people are watching between the different sources. There's almost 700 people watching right now. So thank you everybody for tuning in. Kaz, Storm, Saucy, thank you for all the value that you guys bring to this stream. It was really interesting. I learned a lot as always from all of you guys. So really, really thankful.
Ryan, this is a really cool platform that you've put together. The way we're able to share charts and anything. I'm gonna start cooking, and I'll come more prepared next time and have all sorts of fun stuff to show. So just let me know anytime, and we'll pull up.
Yeah, anytime. We'll probably get some, me and Storm starting if you have the bigger show that we do at the Crypto Takeover. Las Vegas Barbie, what's up? But me and Storm started just doing this ourselves and doing like, charting and things. And I think that crypto Twitter is really looking for a show that can engage and also educate. And hopefully everybody took some education from here and, learned a little bit more about where we are in the market, what's coming, and, what's your part and how you can make it great for you and everyone else. Any closing thoughts from you, Storm or Saucy, before we rug this?
No, I appreciate you guys coming on, Saucy and Kaz, and like I said, I think we just want to be more consistent with this. We have the Crypto Takeover show, I believe, every Tuesday, but throughout the week, just trying to get cool people like Kaz and Saucy and Vegas and all those type of people on, just to give the audience a more in-depth analysis from different perspectives is so cool. So I appreciate both of you guys for coming on, and we'll have to do this a lot more for sure.
Yeah, mad love. Thank you for having us.
Yeah. All right, guys. Well, let's get back to trading. And just remember, if the charts look bad, turn your phone upside down and it's all going to be okay. Happy Friday, everybody. And make sure to follow all the hosts, turn on notifications for when we stream, and make sure to go over to Kaz's FOMO space starting at 5 p.m. Pacific Standard Time. I heard it's going to be unbelievable. Have a great day, everybody. Cheers.
Thanks, Blake.